All right, guys, welcome. So today, hold on, let me just fix this real quick. Okay, all right, guys, welcome. So today we started a bit later, about an hour. We got pushed back we ha- um based on just having a meeting before this, right? But we're here nonetheless. So this is XAU USD, aka gold, and I'll do a quick chart breakdown of what I'm seeing and what I'm expecting, basically. Right? Let me just adjust this right here. Yeah. So basically we're now on the daily time frame. Usually we'd start on the monthly time frame, you know, to get an overall overview of what the pair is doing. So what I'm seeing right now is strong bullish momentum still, right? Overall target is the 5,000 level for gold. Let me just mark that off with one green line. That's the overall level. Let me just adjust this right here. Yeah. So this is the overall goal for gold. Right. On the monthly time frame, we're seeing strong bullish pushes. Um, for the past four candles, we now have 16 days, well 17 days basically, being that this day just opened. 17 days left in the month, but so far we're still continuing with the bullish push, seeing strong bullish momentum on the monthly time frame. Right? If we're supposed to drop down to the weekly time frame, what we can notice is the market based on the last week's movement, we just broke past this level of weekly resistance right here. Let me just change the color of this. We just broke past this level of weekly resistance, indicating strong bullish pressure, right? And last week closed out with a strong bullish candle as well after it formed a level of support right there, which will show a bit cleaner on the daily time frame. Let me just drop down to the daily real quick so I can mark it off. There we go. That's the level of support in which I saw that the market formed in order to push past the level of resistance right here. Right. We also have a daily level right here of resistance. So on the weekly, it's apparent on both time frames, the weekly and both the daily. What I'm expecting for this week is at least a level of retracement coming back down to this level to hopefully, it doesn't have to do it, right? Hopefully retest this daily level and a strong weekly level as well. And we also have an institutional level, which is the whole numbers, also known as a psychological level, in which the market usually respects taps in those areas and then move it. It acts as um uh what would you say, like a magnet where it attracts and repels basically. So that's on the weekly time frame. Let's drop down to the daily where we can see more data. So on the weekly and the daily, we can notice where the market is respecting a trend line right here that's drawn on the daily time frame, right? We have a few taps. Let me just pull it down further. We have a few taps, right? Right here, right here. This to be considered as one as well. Levels of support being formed on this trend line right here and right here. So we have a strong trend line right here as well, in which I'm expecting the market to come and retest right in the daily level. This would be a really good trade, right? Again, and as we can see, we still have a weekly level of resistance in which the market just broke, where we can expect a retest. So what we can expect to see is maybe something like this to continue the overall push up to the 4400 level, right? Or maybe you can push it but and then continue pushing down, but I'm expecting a level of some sort of retracement, right, before taking a trade. The daily candle opened no bottom wick, right, indicating buyer's rejection. Maybe it just opened like that for a numerous amount of reasons, whether it be just strong bullish momentum or whatever, but no bottom wick rejection, indicating that the market, that sellers tried to step in the market before they were beaten by buyers. So I'm expecting a retracement down to this level. Currently, let's drop down to the 4 hour to see what I'm seeing. However, this week we did get a wick in the area. Now looking at the 4 hour time frame, but I'm still expecting the higher time frames to conform, right? I'm still expecting a daily close in this zone before we continue pushing up, even though we did get a top right there. So what can happen is this can still come up, form below as a lower high point to continue pushing down, right? Up in this area, right? This golden zone that I've drawn right here to continue pushing up. Let's see something real quick. If we're supposed to draw a fib on this, we can pull out our fibs from there to there, would still respect our 61.8 level, right? Or even right here, anywhere along this point can wick down, but here is where I'm expecting to take entries when it comes on to the continuation, right? Based on how the weekly look, based on how the weekly looks, based on how the daily looks, right? Yeah. And we also have the moving averages along this area in which the market can come and retest before continue pushing up. But yeah, that's it for me. But what I'm expecting to see is some sort of buyer's rejection, week off, or whatever, to form a lower high point in which I'm expecting the market to sell, right? To sell before the buys, in which this area is where I'm planning on taking strong buys, being that we have a strong daily resistance and also a strong weekly resistance at this level. But yeah, that's it for me when it comes on to gold, right? Pretty simple markup, right? But this area is the area in which I'm expecting the market to tap back into, maybe form a daily candle close, yada yada yada, to get into the buys up to this level, right? And let me go ahead and show something right here. Let me go ahead and show an example of this trade. Right, this was a 23.6, which are usually continuation trades. Let me just break down this level of a trade that could have been taken. This was 12. Well, let me go ahead, change the candle color. Boom. Let's drop down to a lower time frame. All right, so let's break down this trade on a whole, right? Let's imagine that nothing beyond this line isn't playing out right here. We just drop down to a lower time frame where we can identify what's going on. So we already identified this level as an exhaustion area. Exhaustion area means that the market is failing to break past that level, and we're getting a lot of wick rejection along the area. I'm gonna set it to a nice color. Yeah, all right, nice, purple, nice. Right, we're seeing a bunch of wick rejection right there. Also, we have the most recent low right here, low to the high, support to the resistance in an uptrend. Pull out our fib, draw our fib. Pretty simple trade, this one, right? Pull out our fib, draw our fib. Let's drop down to the lower time frame. So we have a strong exhaustion area in which the market did form an ascending triangle. Again, ascending triangle going down to before. So this could even be entry right there, just in itself being a breakout trade. But support to resistance, fib, exhaustion area, as well as chart pattern. All right, let me move this here up a bit. And so now we're looking at the chart. Usually I take trades anywhere after 8 p.m. And right here, past here is way past 8 p.m., which is really good. Right? The trade could have even been taken from right here. Right? This is around 8:30. But let's drop down to a lower time frame. Right? To see anything else. We're this was us a double bottom on the 5 minute to take entry again. We have a bunch of entries, right? This was around 8:30 again, where the market did. I usually take entries on the 1 minute. However, let's drop down to a lower time frame, even lower than that time frame, to see what's going on. All right, so this green area is where I'm expecting to take entries. Exhaustion, again, strong exhaustion area, fib area could have taken based on this being broken. Let me just draw a trend line, right? What I'm expecting to see around this time is, remember, lower highs and lower lows. Let me draw it somewhere else so it's cleaner. Lower highs and lower lows, right? And remember, we're looking for the buys. So as soon as I see something like this, then I take entry right here. Or if I notice where the recent level was broken, which was this right here, take entry right there. So it would look something like this, right? So let me just show you on the chart right now. Random line, right? We're marked off a level of resistance, right? For the this is the lower high point where I'm expecting the market to continue, pushing down to farm highs and lower lows. However, what I saw was this, where the market broke above that area and closed. So now I'm expecting entries. Ideal entry would have been right here. Let me go on a higher time frame now. Again, on average, my stop loss is 70, 100, right? 70. See, it looks bigger on this one right here. And my target would have been this institutional level right here, which was 314 pips on gold. Clean trade. Right? Came back to retest, formed a double bottom, right? Which would have given me, enough people would have been free, would have chicken out and say, oh boy, the market come back down, but then a little Jordan. That's fine. Yes, you understand? Come back down, gave us a double bottom as well as break this right here, giving us a breakout trade past the line in which it was tapping. You understand? Respecting for the counter trend, broken above this line. Persons could have even taken a later entry, right? Right here. Or it could have been an additional entry, still targeting the institutional level, which the market did smash this TP, right? Same stop loss, market never gone nowhere near this, but this right here, this low, you would have wanted to cover this low right here. This is fluctuation. So always put your stop loss below the most previous lows or the spikes in order to cover the fluctuation, right? Great trade overall, targeting the 4200, right? And that's how I could have taken advantage of. Well, I did take advantage of this trade on Friday, right? So I did break down goal, right? Did break down goal for this week already. What I'm expecting to see, right? Maybe it does it, maybe it doesn't, but it would be a really good trade if it does. But that's it for me though. At this time, I'm going to be handing it over to Currency Meech, aka Trades by Drew. All right. So let me just go ahead and stop the share. All right. Yeah. Yeah. Mhm. Oh, hold on, bro. Hold on, bro. Let me just check something real quick because I don't think the audio is coming through. Yeah, let me just double check what's going on with the audio. All right. Talk now. No, I'm still not here. I don't know why. Well, me I hear, but I don't think so. They might hear. Yeah. Yeah, but just fix that a while ago. Nah, give me a second, guys. Yeah, just fix that a while. It's supposed to all work. All right. Might have to stop it and then just start back fresh. All right. Hold on, I'll just double check one last thing. You know what the problem? Media area, but the stream not area. All right. Don't know.
You hear me now?
All right. Let me see. All right. Nice. Fix it. All right. You can continue. You
All
can
right.
we'll start over fresh.
All right. So, good night, everyone. This is Trades by Drew, aka Currency Meech, and I'll be going over US 30.
All right. You can continue.
And as you can see, well, before I get into that, I know you're probably wondering why is my candlesticks all black. Well, it's like a mental thing for me. I don't like seeing the colored candlesticks because it kind of messes with your emotions at times, seeing the colored candlesticks fluctuating, especially when trading US 30, bro, because this pair is very, very volatile. So, like, having the candlesticks all in all black, it kind of helps with your emotions. And if you understand what you're looking for, you don't need to have your candlesticks colored, bro. Because I understand if I'm seeing the candlesticks go up, we're bullish. If I'm seeing the candlesticks go down, we're bearish. So it's very simple to understand. So having that in mind, seeing that okay, we're having back-to-back bullish candlesticks being printed on the monthly time frame, that is basically telling me that the overall volume for US 30 at this point in time is bullish, right? So we have 16 days and 20 hours left within this trading month of December. We are printing a bullish candlestick, which is telling me that okay, for the majority of this month, because we're almost halfway through the month, right? So majority of this month we have been buying, right? So we are having a lot more buying pressure than bearish pressure. So keeping that in mind and understanding that we have been undergoing back to back bullish candlesticks on the monthly, breaking that down on a weekly time frame, we can see that okay, for the past 2 weeks we had a bearish candlestick for the starting of the month. Well, not a bearish, a bullish doji candlestick, sorry, for the first week of the month of December. Last week we had a nice bullish candlestick with a little bit of seller's exhaustion at the top. And now we have started this fresh week and we're expecting for that buying volume to continue. So now breaking that down on a daily time frame, we can see that okay, let me turn on about my technical tools. So we can see that all right, on the daily time frame, last week Friday we closed out as a bearish candlestick. But what are we seeing on the bottom side of this bearish candlestick? We're seeing a lot of sellers exhaustion, which is indicating that, okay, sellers are feeling. Plus, although we created a resistance area, we haven't really engulfed this candlestick, which is telling us that the buyers are still in control. So for this trade setup, I'm basically targeting, let me delete this fib and I'll plot it over. I'm targeting the daily negative 27, and this fib was plotted from point A to point B. This is the same fib that has been plotted for the past 3 weeks, bro, or even a month. This is the same trade setup that we have been trading for the past month, right? So as I said last week, we were targeting the 49,000. We were actually targeting back this area first, but as you can see, we flew through that area resistance. Our next area of interest is the 49,000. Then we'll target the negative 27 based off the daily fib. So this move is basically on its way to that negative 27 or the 49,000 institutional area interest. As you can see, we spiked down here last week Friday. We respected the 48,500 institutional area interest. We also respected a 4-hour area resistance. That is where we plotted this exhaustion zone, right? We also plotted a fib from point A to point B. We are expecting the 23.6, so I'm expecting a continuation type move based off that being respected. Now breaking this down on a 1 hour time frame, we can see that, okay, the market came here, gave us a engulfing candlestick, boom, came here, pushed up here, came back down and created a higher low, indicating that the market is failing to create new lows. So on lower time frames, this trade is basically transitioned as already, because up here we broke minor levels of support, started that retracement, came down here, tapped into that area support, created that low, created a lower high, came back here, created a higher low point. So what we can do is probably plot ourselves a trend line opportunity from point A to point B. Boom. What we can see is, okay, the market came here, created a higher low, made a lower high here. On Friday, we have market open, we spiked down, came and tapped back into that zone, creating another higher low, breaking that area resistance. So lower time frame fib, we can probably plot that there. So we're basically back into that uptrend type move. So this 5-minute time frame has transitioned from that bearish type trend now back to that bullish type trend. So this is a higher low, a higher high at 23.6. So this is basically a continuation. So come NY session, I'm expecting for a minor pullback, probably back down to this institutional area, or probably to a 23.6, to then look for the buying opportunities back up to the 49,000 area of interest. Now for the trade opportunities that I took last week, I will break down those trading opportunities. So I only took 2 trades last week, right? So the first trade opportunity was taken here, and I caught, let's say, a little bit over 200 points, right? Now, I normally target anywhere from 250 to 300 points daily. When it comes on to US30, I can get a lot more. As you can see with this trade, this was a 400 pip trade. But normally, we average around 250 to 300 points per day. And that's a lot of money when trading US30, because it pumps a lot, bro. Now, this trade was based off a fib that was plotted from this area here, which would be our point A to point B, right? The market came here, respected at 23.6, consolidated, pushed down to a 38.2. We had ourselves an engulfing variation. So if you're having a hard time seeing that variation, I'll draw it out for you right now. So this entire candlesticks here, bro, is what created that engulfing variation, that bullish engulfing variation. So as we can see, this was a strong bearish candlestick, then we had a doji and then a bullish candlestick. But if you're looking here, we didn't really engulf this bullish candlestick. And let me clear up some of the data so I don't confuse anyone. Let me clear up this. So boom, let me change this to a color that's appealing to the eyes. Not too bright. Let me use blue. Okay. So boom. Market retraced down to a 38.2, right? We had an engulfing variation. So these 1, 2, let me see. Let me do it easier. Let's see. So these 16 candlesticks, right? These 16 candlesticks is what created that engulfing variation. So this bullish candlestick here with this seller's exhaustion is what completed that bullish engulfing variation. So it took all of those 16 candlesticks to engulf this one bearish candlestick. So that was the candlestick that confirmed for me that this area of support at the 38.2 was being respected. We were also respecting an area of resistance around here, right? That we spiked in and tapped in. Let me change the color of that, right? So we tapped into that area, we pushed up, came here, boom, and then we came and created a higher low point. This higher low point was seen clearly on the lower time frames, like the 15-minute. So all of this was basically just one push, right? So this was a lower high, lower low, lower high, lower low, lower high, lower low. All of this is basically one push. Understand? Lower high, then we created a higher low. If you understand structure, and you know how structure works, you know that if you're seeing a higher low in a downtrend, it's a clear indication that you might be undergoing a transition phase. A transition phase is when you're transitioning from a downtrend to an uptrend or an uptrend to a downtrend, right? So I saw that the market was creating a higher low point around this area here. Also, we had ourselves minor areas of resistance becoming support, right? So that was enough confluence for me to take this trade. And it was also within my trading system. So I normally take trades anywhere from 9 minutes after 10. No, 9 minutes after 9, sorry. Or 10 minutes after 9. I'll look to take a trade going into that Wall Street open. Wall Street opens at 9:30. So come 9:30, you will see a lot of volume coming into US 30. So this trade was taken on the 1 minute time frame. And as I said before, I will look for trades during anytime after 10 minutes after 9, I'll be looking to take an entry. So boom, market came here. I saw that we were consolidating within this area. Boom, boom, boom. I saw that we came up, spiked, top the SMAs and came back and created a nice engulfing candlestick with a lot of sellers exhaustion, right? So this trade was taken around 9:27. So boom, entry taken there. My stops were very tight on this. I think I had my stops below this area here, right? And I was targeting back my institutional area of resistance. Now, boom, that was the entry. Looking on the 1 hour time frame, the entry was taken in the wicks or close to the wicks of this 1 hour candlestick. So boom, instantly as I took the trade, bro, the volume kicked in. I'm going to go on the 5 minute. As you can see, the volume kicked in instantly, and we got a push to about, this was 200 and, call it 250 points. I was targeting here for, I call it 300 points, but I saw reasons to exit this trade early, seeing that we were failing to continue on that bullish push, bro. And when you're trading US 30, bro, or if you have history trading US 30, if you know the pair, when you start to see certain things, certain time of the day, you will know that, okay, it's time to just exit the trade and call it a day. So what I saw to exit this trade was a level of support being broken on the 1 minute time frame, right? So I saw this area of support up here on the 1 minute being broken. As soon as I got that confirmation, I exited this buy opportunity. So the confirmation was this 1-2 break. As soon as I got that, boom, I exited the trade around here. So this was about 165 points. It wasn't bad, but it wasn't what I wanted. I still ended the day in profit. That was good. And after, as you can see, after I exited the trade, boom, we started to melt down to that area, right? So the second trade opportunity was taken here. So this fib was still valid, seeing that we didn't create a new high. So this is basically still a part of the retracement. Do you understand? So this was still our point A. This was still our point B. I thought that the market created a point C right here, but we didn't create a point C. We just had a steeper retracement, right? To know, sorry, to know area interest that is very valuable. When it comes on to trading US 30, bro, it likes to respect the institutional areas of interest. As you can see, this is the 47,500 area. As you can see, we respected it here, we respected it here, we respected it here, and even at the 48,000, as you can see, it was respected here, it was respected here, here, here. So these areas are highly respected, bro. And if you plot these areas on your chart and go through your chart, you're going to see that it's highly respected, right? So boom, the market came down, tapped that 47,500 area. We tapped the 61.8%, which is my golden zone. We also tapped in a 4-hour area of exhaustion that I plotted here that was respected there, 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 here, and was also respected here. And we were also around the 4-hour SMEs. So this trade had a lot of confluences, right? So I was very confident in this trade. This trade was also taken on the 1 minute time frame. As I said before, we are only looking to take trades around 10 minutes after 9. So once 10 minutes after 9 pass, bro, I'm looking to take an entry. So boom, what I saw was basically, let me go back on the 5 minute. Boom, the market came here, started the push, created a higher low point. As you can see, I have myself a random line plotted there. We pushed up, break the SMEs, also breaking a level of resistance here, right? So we basically created a higher high point, retraced, came here, and created a higher low point, right? Boom. As we created this higher low point, look what time it is. So this was around 9:20. So I'm within my trading system, right? My entries was taken right on this area. So this candlestick right here, this doji candlestick is the candlestick that I took my or based my entries off right there. My stop loss was around 100 points. So I normally risk anywhere from 80 to 100 points on US 30. As you can see, that's a lot of wiggle room for this trade, bro, or for US 30. Right? So I was risking 100 points, and my target was the institutional area interest all the way up here. Boom. So that was the second trade that was taken. Very simple trade, very textbook like setup, and that was it. Right? So now, as we can see, as I said before, this trade has already transitioned on lower time frames. So we're just expecting the continuation of that push come NY open, right? So boom, I'm expecting for this to just continue pushing come 9:30 or 10 minutes after 9 tomorrow. I would like to see probably a pullback to this institutional area. Let's see how the 15-minute looks. Yeah, seeing that we're still underneath the SMAs on the 15-minute is a strong possibility that we might have that pullback. But yes, if it happens, it happens. If it don't happen, we already like complete halfway of this push, I'll just stay out of the market until I have a decent setup. But if we do get that pullback, I'll be looking to take the buy opportunity back up to that 49,000 area interest. And at that 49,000 will also be a new all-time high for US 30. So that is it for me. And I hope y'all understand the data that was presented to you. I hope you all have a splendid trading week, and that is it for me. Okay, I'm out. I'll hand it back over to Pips to pay out, aka Terro Trades.
Okay, guys. So again, thank you again for coming. You understand? This one was a bit later than usual. You understand? Still respect, still appreciate the turnout and everything. But yeah, do hope you guys enjoy the rest of your day and have a productive trading week. I hope you guys make some money. Yeah.